Good evening, everyone. I hope my voice is audible to you and I'm clearly visible. May I get a quick confirmation on the chat box? Am I audible and visible? Yes. Awesome. Great. So great to have you all in the live session for Advanced Audit and Assurance. And this is an exam which I used to teach, but then I stopped teaching this exam because I was focused towards SBR. But now I am resuming the classes of AAA. So I've taught audit and assurance. In fact, I started my teaching career with audit and assurance only. So when previously I used to have my own setup, so I was taking up audit and SBR. Then I switched to some experiences and then I just had SBR and FR. So now I am again coming back to audit and assurance. So I would be glad the people who've already enrolled. I am really glad to have you all in my first batch of audit after so much of long time. Okay, so this exam is very technical, challenging, but it is very much related to SBR. So how many of you studied SBR here from me? How many students are here who know me from SBR? Yes, Fani is there, Deepti, Adil, Apeksha, great. Oh, hi Apeksha. Nikita studying, Mayank, hi Mayank, yeah. So many students are here from SBR. Now I want you to know how SBR was versus how AAA is quite different. But 40 to 50%, literally 40 to 50% of your success in AAA is dependent upon your SBR knowledge. How good you are in your IFRSs, that would determine how good an auditor you are. Just imagine, if I want to check, I always used to give this example to you. Remember in your SBR classes, if I want to check mocks, I should have the knowledge of SBR, then only I can check the mocks. So similarly, if I have to audit the financial statements, I'll come to what is audit. But from the basic knowledge of AA, F8 exam, you guys know that audit is performed on financial statements. Audit is not performed on budgets. Audit is not performed on, I'm talking about external audit, right, which is required, statutory audit. So that major audit engagement is not performed on something other than financial statement. So who's making financial statement? SBR teaches us to make financial statements, balance sheet, P&L, cash flow, individual accounts, cash flow, and as well group accounts. So all these things are coming from SBR. The source of light of AAA is SBR. Then you just twist the things, you dig a little deeper in SBR in AAA. So I'll tell you exactly how. So for that, let's first understand what exactly AAA is. Advanced Audit and Assurance. So audit and assurance exam you guys have given, AA, previously known as F8. Anyone here who's exempted from F8? Anyone who's been exempted? Okay, Suraj, me. Okay. Sad but true. We'll have to focus more on you because this paper gave you little basic theoretical concepts like what is audit risk, what is risk of material misstatement, how audit risk is divided between ROMM and detection risk. So such basic concepts, what are those charged with governance, what is agency theory, what is review, what is audit report, all these basic things were covered in this exam. But don't worry, in my first lecture when we'll start our classes, I'm going to cover basics only. I'm not going to directly dive into, okay, this is the standard, this is the audit procedure, this is the standard, this is the audit risk. No. We are going to take it slow and we are going to do it in piecemeal. First, we'll understand the concept. Why audit is there? So let's understand why this subject is existing. Why do you think this exists? Why do you need an auditor? Why do you need an invigilator? Why do you need anyone to check your mock? Because ma'am, if we will check our own mock, we are so optimistic. We are going to make sure that we are passing with 100. So whatever you've written in your paper, you'll always feel like that's right. So you'll give yourself 100 on 100, so convenient. So similarly, an accountant who's preparing, this is this accountant. Remember in SBR, this accountant used to make so many mistakes, isn't it? He was full of mistakes. Sometimes he's not applying IFRS 5 correctly. Sometimes he was not applying the basic IS 16 criteria correctly. Remember? One question, even I remember I did with you in live classes. He went on a coffee with some other company's accountant, and that was a stupid thing this accountant was doing, and they were discussing the accounting treatment of leases, and both were discussing wrong accounting treatment. So basically a blind guiding a blind. So that sort of mistakes this accountant was doing. So can shareholders, stakeholders actually rely on this person who's committing so many mistakes, which we have seen in SBR? Can we simply say, whatever you've written is correct blindly? And let's rely on this financial statement and let's invest our hard-earned money in this company. Shareholders never trust accountants. We are not trustworthy. So we are ACCAs, we'll aim to become an accountant. Maybe the ones who will become auditor, I'm not talking about them, but the ones who will become accountants, we are not trusted. So who are trusted then? Let's understand this. This is known as agency theory. I will decode this word for you, and then you will understand the whole need of this subject of audit. So this is company ABC. Okay. I want to invest my money in this company. I am an investor. I'm looking this company from outside. I'm a potential investor. I want to buy shares of this company. So this company pitches its shares to me and it gives its financial statements, annual report to me. Company says, take it. Judge whether you want to invest in this company or not. I'm like, okay, thank you. Let me see. Let me review. So I go back home. I take this brochure kind of thing. I take this financial statement kind of a thing. I go back home and I'm reviewing it. Then a question strikes my mind. This brochure or this financial statement, financial statement is not a brochure, right? So I'm just explaining it with an example. So this financial statement is prepared by the accountant of this company only. So how can I rely on it? Has somebody checked it from outside? So what this person will say, he'll say, this is prepared by you only. Why would I trust you? You'll always say you'll sell yourself at the highest price. So when you look for classes, do you just trust what the tutor says, or you ask the students who've taken classes from that tutor? How is sir teaching? How is ma'am teaching? Should we enroll? So you ask for reviews, right? So that same sort of thing this person has in his mind. Why would I trust company ABC? So to meet this trust, because there is a trust problem, trust issue. Trust issue between whom? This is potential shareholder. There are existing shareholders also, the people who've already invested in company ABC. They have already put their money in this company, and in each annual general meeting, they are represented this financial statement, and they also have trust issue. Why? Because this company is owned by these shareholders, but this company is directed. The key word here, everyone. Directed and controlled. By whom? Management. Board of directors. So are board of directors shareholders? You guys have invested in companies. Are you board of director of that company? But you are owner. Maybe by 0.1%, but you are an owner. So this owner is a different person. The person who's directing and controlling the company is a different person. And this person is preparing the financial statements. How in the world would the owner trust the management? If you are not that stupid person who trusts everyone, you might trust. But if you are a skeptical person, you won't trust. So what will happen? To meet this trust issue, to evade or eradicate this trust issue, a new person was brought. And this person, just imagine like a very professional kind of a person who enters this whole situation. And he says, I will audit these financial statements for the stakeholders so that they can trust the management. So that they can trust the financial statement. And this person is known as auditor. So he's an external person. He has to be an external person. Another example, if you guys have given your practicals in your board classes, in our country, we have those class 10 and class 12 boards, right? And we used to have those practicals. A tutor from other school would come and test our knowledge. Why? Because that board does not trust our internal tutors, our internal team. They say we want someone else who will test your knowledge so that we know you are prepared for the exams. That happens in colleges also, I guess. Yes. So this is what basically this trust issue gives rise to auditor. And this agency theory, what is this agency theory? This is the byproduct of agency theory, because owners and management are separate people. So management is the agent of the owner. So there is an agency theory which says that principal and agents are two different parties, where principal in my example was the shareholder, the owner, and the agent was the person who was directing and controlling the company, that is the management. Correct? So because there was a trust issue between them, we introduced a person known as auditor. That is why audit subject exists. So you will be this professional person who will go to company and conduct audits. Right? So what exactly is an audit? Let's discuss that. Before that, please tell me, are we clear till here? Do we understand agency theory? Yes. See, it's very important for us to know exactly why we are studying a paper. I can't simply start with this is tested in question 1, question 2. No. You know what exactly why we are doing this in practical world also. Okay. Now, what is an audit? What do you mean by audit? My question to you, let's make it interactive. In the chat box, I can't ask you to unmute yourself because this has to go to YouTube. So in the chat box, what do you mean by audit? What do we mean by audit, everyone? Expression of opinion, examination of financial data or records, okay? Independent review to see if it is true and fair or not. Very good. So Vidushi gave me 2 keywords. Very good. You guys know the essence of audit, right? You know the feeling behind this word audit. So it is basically we are testing whether my financial statements, which are prepared by that stupid accountant, are true and fair or not. Yes. So what do we mean by true and fair? In SBR conceptual framework, you used to have 2 words, relevance and faithful representation. So true and fair are somewhat same as those 2 words. True means that is factual. You know, it is 100% factual. We are not cooking up stories. Factual. True. Truth. Right? There's no misstatement in this. It's complete. It's free from error. Fair means it is neutral. It's not biased. We have not, done any sort of biasness while preparing our balance sheet P&L. For example, if the accountant says, I want to inflate my revenue, why would he do that? Because he want to work in the interest of shareholders. Have you seen in SBR? See, you've given SBR. That's why I'm quoting the example of SBR here. So in SBR, they used to say that because we want to work to the interest of the shareholder, so what we did, we inflated revenue. We didn't apply IFRS 15 correctly. So our profit increased. Thus, our shareholder wealth maximization happened. So that type of logic was given by the accountant. That stupid logic was given. That I am working in the interest of shareholders only. But I would say, sir, sorry, you cannot just work in the interest of shareholders. Then you are being biased. What about other groups of people? What about taxation authorities? What about banks? What about general public? If you're a listed company, they are also interested in your business, right? So this is going to be very important for us to understand that what do we mean by fair? That is neutral, where you think about all parties. Correct? So audit is when I examine my financial statements and evaluate whether those are true and fair or not. So this audit can also be of various types. One is internal audit. Another is external audit. So what do I mean by internal and external? Just like in our practicals, we used to have internal exams and then external exams. Is that so? Internal audit happens on your internal controls. Internal audit happens on various things like are you good in cost cutting? It can be even on your how you're affecting your environment. So internal audit is an optional thing. You want to get this done for the better process of your business. See, I'm explaining things in layman language to you as of now. I'm not getting into the definitions as per your subject. So internal audit is an internal thing. So if I am doing a business, TGP, right? TG Prof is just recently launched. So if you become internal auditor of my TG Profs, so let's suppose you say, ma'am, how much subscription you are paying for this platform, or how you are making profits? Is there any way we can cut the cost? Or is there any way we can make the process more automated? So you're conducting an audit on my processes, on my standard processes, systems. You're checking my controls, right? So that is type of an internal thing. It's not arising out of because there's an agency theory, there is a mistrust between the shareholders and the management. No, it's my thing. I want to get this done for my business to have better things, better procedures, better policies, better process. So that's why I appointed an internal auditor. Whereas external auditor, somebody is mistrusting me and that person brings in this external party over my head. Now he will keep an eye whatever I'm doing. He will check. If I say, for example, normal discussion, if I say, I have 20 employees in my business. So this external auditor is always having a skeptical eye. This is his expression all the time. He's always checking what you're doing. So he always has this expression. He's going to keep an eye, observe that what this person, this company is doing. He will see if the employee puts in their thumb while entering into the company, right? They mark their attendance. So he's going to check those attendance sheet to make sure there are 20 employees only. And these 20 employees are working from 9 a.m. to 5 p.m. They're not part-time employees. So he's going to verify everything, every detail. So basically, he's going to check how true and fair you are as a company. Now, nobody would want this person to sit on their head. Would you want anyone? Yes. If I say, guys, you are studying or not, let me send some external party to your house. This person is going to sit on your head and see whether you're studying. You might say, ma'am, today I had a dinner to attend, so I didn't do the syllabus. I might trust it, but that external party will keep an eye. Are you sleeping, watching television, or you are actually going somewhere and you have some work? Nobody wants this, right? So why would we get this external party into a business? Because of mistrust. And mistrust will happen mostly this mistrust will happen in listed companies. Nobody really wants an optional external audit. So for listed companies which are working in public interest, these are the companies which are required by law to have external audit. That is statutory audit required by law. They can't omit it. Listed companies, you all know, who are listed in the stock exchange, whose shares are floating in the market. So everyone in the public are interested in their business because they have a potential to invest. Whereas these public interest companies, so any company which is involved into maybe chemical manufacturing, something related to arms, not arms, right? So something related to weapons, So that sort of company which is affecting the environment or is related to public interest. Why? Because if there will be a leakage in this company, it will affect the environment. There might be a calamity because of it, right? So that is a company which is working in public interest. They are also by law required to get audit done, whether or not they're listed or not. Now, some people optionally also get the external audit done. That's their choice. Maybe they are those sort of people who keep home tutors. So they want tutors to come at your place and make sure that you're studying, right? So optional audits are also done. So do we understand the concept of what audit is? Why do we need audit? And who gets the audit done? Do we have answers to these questions now? Yes? So far, good? Any doubts still here? Great. See, this might seem to be very easy when I am speaking these things out, but these are part of your syllabus. Okay, so you're covering your syllabus as and when I speak. Now let's consider, you know the subject and why you are doing, but what is the syllabus? First, you have regulatory environment. So when you are doing an audit as an auditor, now you will switch your lens. First, your lens in SBR was as an accountant, as an IFRS expert. Now your lens is of that of an auditor, that professional who's going to check everyone in that company, in his client's entity, where he's going to act and verify everything. He's not going to trust anyone, anything, right? So he needs evidence for everything. He needs verification for everything. He's going to inspect the things. He's going to inquire, right? So this person, this professional has some regulatory environment in which he works. So there is a regulatory environment related to the whole process of audit. So there are some miscellaneous topics here, general topics, like we might have money laundering topic here. We might have something related to just mere concepts, theoretical concepts, which might be asked as direct questions in the exam. Theory topics, right? So we'll do that. Then ethical considerations. So ethics we guys have done in SBR. Question number 2. We all remember it. What was the ethical consideration in SBR? In ethics, it was simple. PICOP was there. Professional competence, integrity, confidentiality, objectivity, professional behavior. So this is the 5 principles of code of ethics, which an auditor and accountant both are supposed to follow. Why? Because both are ACCA members. So they need to follow this. But as an accountant, if I incorrectly apply any IFRS, we say that the accountant is not competent. But what is the case if auditor did a mistake? What kind of mistake can auditor do? Imagine. Let's see. Tell me one example where auditor can commit a mistake. Wrong opinion, familiarity, okay. See, wrong opinion. This paper is all about portioning your words. So we will use word like incorrect opinion, not wrong. Familiarity, yes. So what kind of mistakes can audit do? The auditor can simply take 2 competitors, okay, and audit both of them without telling each one of them that I'm auditor of that company also, I'm auditor of your company also. So what is this? He's creating a conflict of interest. As an auditor, you are getting into the controls of that company. You are going to see everything of that company. So you're literally going to scrutinize that company in the minutest of the detail. You will see how their bills are raised, how their invoices are stored, how they make their entries to the journal, then to the ledger, then to the balance sheet, what all suppliers they have. So you'll get all the information, and as part of getting that information, if you are also auditing their competitor, there's a high degree of risk that you might pass on the information if you develop some familiar kind of relation with that competitor. So maybe he makes you friends. So you might transfer the information from your client's business to his competitors. So you can simply transfer the information that comes under confidentiality. So these are the types of threats I'm just giving you one example which an auditor faces, because auditor is not asked about competence on the basis of whether he was able to apply IFRS, because he's not applying IFRS. Please understand. That's the work of accountant. He's checking, he's invigilating, he's scrutinizing whether that accountant has applied them correctly or not. So his competence is not directly related to IFRS. His competence is related to, or his ethics are related to whether he's following this PICO and whether he's following the ISAs, that is international standards on auditing. Just like we had on accounting, we have on auditing as well, right? So these type of questions will be asked you in section B of your paper. And this first part of your syllabus, regulatory environment, is omnipresent. You might find it anywhere and everywhere. So it is not that it will be there in section A only or section B only, it can be anywhere. So direct question, they might not ask you at all, but this direct question can be in question 1, 2, 3, anywhere. We don't know. But this ethics will surely be there in section B. Then practice management and quality management. So this is also one of those theoretical topics which we'll cover. We have some auditing standards on this. So this is also going to be there in section B mostly. Okay, it might be there in section A also. There are some odd chances to find it in section A as well. Then if you go with planning and conducting audit and completion and review and reporting, these are the most important syllabus areas which are directly linked with SBR. Most important areas of your syllabus. So I will spend some time on them. Okay. So what is there in this particular topic? Planning. See, if I want to conduct an audit, as an auditor, will I simply go to the company A, and say hi to them? Hi, I'm the auditor, let's conduct audit. So will you start dancing in that company? You need some plan. You need to understand before going to this company, you need to sit and have a meeting with your team. You need to understand this company. You need to understand what is their pestle. What is pestle? What is pestle? Done SBL. Come on, tell me. What is pestle? What is pestle? Looking at the environment. P stands for political. E for legal, social, environment, technological. So pestle is basically the whole external environment, politically, economically. Then you have social environment, then you have technological environment, then you have your general environment, then legality also. So you need to consider everything about this business. You need to understand this business and you need to conduct a risk assessment. Now let me give you a very practical example here. If a company is a shop, okay, a retail shop, a grocery shop, where a person will come, ask for chips, take the chips and go. So do you think this company will have significant risk related to recognition of contracts, IFRS 15? Do you think? Will this company have major risk associated with revenue recognition where I am to deal with complex contracts with customer? Is there a complex contract with customer in a shop? Yes. You go and buy chips today, will that person make you sign a contract? That I will give you chips, packet of chips in the span of 3 months. If I don't give you, then I will give you the refund. This is the terms and conditions. No, right? So you did the risk assessment that the risk is not related to complex contract, but yes, the risk is related that there are number of sales. You know, the quantity of sales is high every day. So we might miss out something. And specifically, these are small sales. So there will be cash. So we might miss out recording cash. So you think, you make your mind open, okay? And you have to imagine yourself in that situation, that I'm going to a shop and I'm conducting an audit. So I need to see how their inventory store, are they making their inventory count properly as per IS2, right? If the inventory went obsolete, have they, derecognized it? Have they recorded a loss associated with it? So that is type of risk which revolves around a shop. So you can't say that there is a risk related to 5-step approach of that revenue recognition in this business, because it's a small business. So this is the type of risk assessment that you do once you understand this business, and you do this risk assessment even before you go to that company. You sit with your team, you take papers of company A and you assess the risk. So what you do, you also do materiality analysis. We'll do this topic really good. It's a very important topic of audit. What would be material, what would be not, which misstatement would be material. So you create thresholds, and then you assign the work to your team. As an engagement partner, you make a team and you assign the work. This person is going to do handle this stuff. He's going to handle the inventory. He's going to handle the sales department. He's going to handle the direct costs which are incurred by the company. He's going to handle the indirect cost part. So whatever type of, someone is going to handle the payroll. So you're going to divide the work between your team based upon the risk assessment and understanding that you've had of this business. So that's the first stage. This is known as planning stage. Now, what I mentioned in this planning stage was about risk. So there are different kinds of risk. Risk can be a business risk, which a business faces, as the name suggests. Business risk which the business faces, not related to the auditor. So if you say that I'm working in hospitality sector, I'm having a hotel. So what is my business risk? If there would be a pandemic, like recently there was COVID-19, there will be a lockdown and people will stop traveling and my business is gone. There will be a temporary shutdown. So that might affect my going concern. That's my business risk related to my business. It's not related to audit. So you also assess business risk in your understanding part as an auditor. Then we assess the audit risk as well. Now, this audit risk is divided further between two kinds of risk. I'm just giving you an introduction, okay? There's a proper topic on this. And this is also carried forward from AA. The audit risk is going to have ROMM, risk of material misstatement, which is because of inherent risk and control risk. So inherent risk is IFRS 9, derivatives. Remember? So that is inherently risky. How good you were in derivatives, how good you were in hedging. Till the last date you were crying, ma'am, I don't know what to do with hedging. So you were not good enough with hedging because it's confusing. Even ISB says that we have less logic attached with hedging. That's a current issue. So basically we are saying this component, this recognition of derivatives, hedging instruments, hedging items is complex inherently. It's, it is devised in such a way that it is difficult to account for, right? So that is inherently risky. So that is an audit risk. I need to see whether their accounting treatment is correct or not. So how you're going to comment on audit risk? We are going to follow a technique known as MTR. MTR. For a particular standard, let's suppose I said inherently application of IFRS 9 here is risky. In the planning stage, I've already assessed this with my team that this IFRS 9 is risky. So my team will ask me, so ma'am, what do you think? What would be the materiality? So I will take the financial statements and I'll calculate the materiality of the hedged item and hedging instrument recorded. How do you calculate materiality? I'll tell you. You don't need to know it now. Okay. Then I'm going to talk about the treatment. This is the answer writing technique of AAA. I'll tell you this question is going to come for around 20 to 24 marks. So pay attention. MTR. I will first write about the materiality of that particular item, transaction or balance or disclosure. Then I'm going to talk about its treatment. Treatment as per what, ma'am? As an auditor, as I said, you are interlinked with SBR. So IFRS 9 hedging as it is, you are going to write it here. This is why if you don't have SBR knowledge, please don't sit for AAA. Either you should be studying with SBR, both of these subjects together, or you should have recently passed SBR, or else you need a very good brush up of IFRSs. So that's why I chose to pick up this paper. I usually don't pick up exams. There are a lot of exams in our ACCA qualification, but I chose to pick up this paper because I am having the expertise in this treatment. So I exactly know how would I check this as an auditor, right? So treatment is coming from SBR IFRS 9 as it is. We are going to vomit it out on our answer sheet. Then I am going to talk about the risk. As an auditor, now switch your lens. You have to switch your personality from SBR to AAA. What is the risk here? The risk is that maybe my financial asset or my financial liability is understated or overstated. So I'm going to write about the risk. So first materiality, treatment, and then what is the risk as an auditor. And then I'm also supposed, because this will carry professional marks, so I'm also supposed to give some extra line, add flowers to my answer. How? I'm going to tell them that let's keep a holistic approach. Let's suppose this risk was related to IFRS 15 revenue. A new business, not a shop. The risk was associated with revenue. So together with revenue, you will not just stick to IFRS 15 rules here. One line you will mention, we need to pay attention to receivables also. Why? Revenue leads to receivables. What leads to receivables? The customers are your receivables, right? You sell something, they say we'll give you money, so they become your receivable. So if you have incorrectly recorded your revenue, if the risk is that incorrectly I've recorded the revenue, the risk is also there that I have incorrectly recorded receivables. So what do I need to do for these receivables? I need to work on my internal control system. In how much time I'm collecting my money? Is there any bad debt? So you have to create an evaluating type of mindset, which you might not be understanding as of now because we don't have any case study in hand. But you have to link the things. You can't simply say the MTR only. You have to dig deeper than MTR. MTR will give you enough marks to pass. But to get those extra bonus points, we have to go a little ahead. And those bonus points are known as professional marks, right? You can also talk about your response here as an auditor. If you find this risk that your asset or liability might be understated or overstated as per the case study, so you're going to write your response as well, which you will do as an auditor. So I will pick up the draft financial statements and I'm going to check. Or maybe I'm going to inspect, I'm going to inquire. So these are the things. You might recalculate something. So that is just not a proper procedure, because audit procedure is after planning stage, right? You're just conducting a meeting. So you're discussing what all things can we do. I'm not as of now telling you that go and do it in the field. We are just discussing, having a brainstorming meeting with our team, planning stage. So in the planning stage, as a partner, as an engagement partner, I'm going to tell, okay, this is the risky area and I feel for this, we should do this. That type of discussion. Do we understand audit risk? Yes. Do we understand planning stage of audit? All alive? Awesome. Next. See, question number 1 is always related to planning stage. Evaluate the significant business risk faced by this company. This is for 8 marks. I just explained you what is business risk. So even if you try and pick up this question now, you can answer to this. You know what to do here, right? Business risk, pestle analysis, and what would be the risk associated with the business as a whole. And then evaluate, prioritize, not just write any risk that you find. It's not that puzzle sort of thing, which is going on social media these days. Whatever you find first in this whole puzzle, that is what is coming to you in the next year. So first you find money here, what you find. So that is not this type of puzzle. You have to prioritize the risk. Material misstatement risk, that means ROMM. That is inherent risk and control risk. I was explaining you audit risk here. So ROMM includes inherent risk and control risk. And another component of audit risk is detection risk, that the auditor won't be able to detect a misstatement. That is detection risk. So here they are asking you in this question just about ROMM. That is inherent risk and control risk. Then please note that you should not evaluate risk related to audit of animal inventory, because this will be separately dealt at later stage. So this question is for 18 marks. Risk 8 plus 18. So the concept behind this risk is IFRS. Nothing related to too much related to audit, just materiality concept. So you are getting 18 plus 8 out of just SBR. Are you getting the importance of SBR here? You wrote the treatment, you wrote the risk, you wrote the materiality, and then you are also asking or giving your response a little bit. So it is SBR basically. Primarily, you're talking about standards here. So you are getting 18 marks for that, right? Then discuss and conclude on the impact which outsourcing the credit control function will have on our audit planning. So they are saying our credit control of the client, we are auditors, our client's credit control is outsourced. So what will be our impact on our planning? So we will have to visit that outsourced company, what all information we might call for. Because if the client's in-house, there is a credit control department, I can go to that department and check the things as an auditor. But if someone else is doing it, if it is outsourced, then there will be some, restrictions on me also as an auditor. So there are some terms that I won't use here, that what type of letter you might call from that outsourced firm as an auditor. So basically, we will have to discuss what would be the impact on our audit because the credit control department of our client is outsourced. Then design the principal audit procedures to be performed in respect of holiday pay obligation. So there is a procedure to be designed. What is procedure? 7 marks. You will pass audit if you get the skill of making procedures. When I was a student, I'll show you someday if you guys are enrolled with me in a live class, I'll bring my register that I made as a student. I wrote IFRSs, I wrote audit procedures. On one page, I wrote the standard, another page, I wrote the audit procedure. And that's the reason today I'm teaching this, because when I studied this subject, I really did it thoroughly. And to be very frank with you, when I did my AAA, that's when I got the expertise in SBR. It was not when I was studying for SBR that I did it holistically. When I did AAA, I did IFRSs very much in detail because I knew that AAA will take it deeper for the sake of constructing procedures. So I made proper notes of mine. Okay. So these are the procedures, which is the work to be done by the auditor. So auditor is going to conduct something on IFRS 15 to check whether that revenue is correctly recorded or not. So there are some promises made by the management. Okay, let me give you an understanding, which are known as assertions. If you remember from your AA, assertions, promises made by the management. What are the promises? Management says, whatever I have given in the balance sheet exists. Any asset that I've written there exists. Okay. It is valued correctly. It is complete. So these are the types of promises which anyone who makes the financial statement, he would make that promise. So as an auditor, I need to test that promise, that assertion. So I will conduct some audit procedures to check each and every assertion. So if I want to check whether the things are valued correctly or not, so what I'll do, I'll get valuer's report. I'll assess the valuer's report. If I want to check whether things are calculated, that means I want to check the accuracy. Accuracy is one of the assertions. So if I want to check accuracy, I will myself sit down as an auditor and recalculate. You getting this? So this is how you check the promises made by the management by doing various verbs, by doing various things, which includes recalculation, assessment, inquiry, analysis, inspection, observation. So we'll do all these things. I'm just giving you an idea, right? Okay. So that's it. This is the question number 1. This question is for technical marks are 40 marks, 10 marks are professional. So why we are getting professional marks? For our communication skills. So there would be a format to be made. This is an email format. Then there will be analysis. As I said, you have to think out of the box. You can't simply say MTR. You have to go a step ahead. So analysis. Then there will be skepticism. Skepticism is keeping this expression constant. This expression, always skeptical. What is happening? Don't trust anybody on the face of day. Right? You don't have to trust someone easily, the accountants easily. You have to be skeptical. There might be something wrong with this treatment. Then your judgment and commercial acumen. So you know what is judgment, right? What you judge as an auditor, that is your materiality, right? Materiality is not always calculated in numbers. Materiality is also by nature. It's not about quantity only, it's also about quality. So that is based upon judgment. Commercial acumen. What is commercial acumen? When you consider cost benefit, that is something reflecting commercial acumen. So you're not that spendthrift person who doesn't think about money at all. So having acumen. So you have to apply these skills and you get professional marks. Okay. Question number 2. What all should be considered before accepting a client? So do you accept a client just like that? You're an auditor and some company says, please come to my company and conduct a statutory audit. I would conduct a KYC. What is KYC? What do you mean by KYC? What do we mean by KYC? Yes. Know your customer. Exactly. Even if you go to a bank and open your account, they are going to ask you number of things. I went today only and I was having a headache. They want to know your address. They want to get your copies of national ID, what not, PAN card, this, that. So they are doing so much of things to know their client so that he is not a fraudulent person. So as an auditor also, guys, you have a goodwill attached. So you need to audit your client first. You need to audit his mindset first. Is he a fraud person or not? Know your client. So before accepting any engagement, you have to do KYC, plus you have to consider any conflicts. As I said, if I am auditing, let's suppose, talk about 2 competitors. Any 2 competitors you have in your mind? Tell me 2 competitor companies. Apple and Samsung. Okay. Taj Mahal and Red Label. Fine. Apple, Samsung. Correct? So if I am picking up audit of Apple, I need to first consider it before accepting Samsung's audit, because I'm already conducting a competitor's audit. So first I need to tell Samsung, you know, dude, I'm also conducting audit of Apple, and then I'll go to Apple and tell I'm going to take up audit of Samsung. If they both are agreeing to it, then they will both sign a confidentiality agreement with me. They'll say this is proprietary information you will not share with Apple. Samsung will say this to me and Apple will say you will not share it with Samsung. Then I'll sign it, I'll be legally bound. Then I can conduct the audit of 2 competitors. Then it's allowed, right? So what all things you need to consider before accepting any engagement review report on capital expenditure. So this is something you won't understand as of now, but you do understand the feeling behind this requirement. They want to know what all things to consider before accepting a client. Then assume that the auditor accepts the engagement Recommend the examination procedures. Once again, procedures, work. This time the work is on capital expenditure forecast. So this is not purely an audit assignment. This is a review assignment. So in that review assignment also, I have to conduct some work, that is the audit procedure. So they're asking for 10 marks audit procedures. So procedures for 7 marks in question 1, 10 marks in question 2, 17 marks. Great. Then evaluate the matters to be considered on the completion of the audit and audit evidence you should expect to find during your review. Okay. You are completing the audit. Now you are in the another stage. You have come out of the planning stage. Now you are on the stage of completion and reporting stage. In question number 3, you're towards the end. So we are going to say what is the evidence that I should have. Now, what in world is this evidence? Flashback. You started audit because there was mistrust. So you want to give an opinion to the shareholders that don't worry, this company is giving you true and fair financial statements. When you pass this statement, you need an evidence. You can't simply, then you can simply go and say to anyone without doing any work. If you are a procrastinator, you might doing any work, you might go and tell shareholders, everything is true and fair. Good. Possibility, then there would be so many frauds. So you need to contain something as evidence with you. If someone tells you someday, maybe media, they ask you, why did you say the financial statements are true and fair? What led you to give this opinion? What is the evidence? Is this evidence sufficient and appropriate? Did you think that this is the only evidence? How do I know if something is sufficient and appropriate? Let me give you an example. Let's suppose as an auditor, I went to company A and I said, Mr. Company A, how many employees do you have? The CEO said 20. Now I'll not simply ask for the sake of formality. I have to inspect. Then I go to one of the employees, maybe the HR head. Then I ask him, how many employees your company have? He says 20. Good. The fact got cemented. 2 people said same thing. Then I said, these 2 are at a higher position. He's an HR head, he's a CEO. They 2 can collude. So let's go to someone who's at grassroots level. So I went to a laborer or maybe someone at the, very operational level. I asked, how many employees do you have in your company? He said 15. Now, if you would be a lazy auditor, you'll say 2 people said 20, 20. Done. No need to conduct any further review, inspection, whatever. We've got an evidence. We have a statement of CEO and we have a statement of HR. But a professionally skeptical auditor, a competent auditor, because he got a conflicting statement, he look for further evidence. Now he will ask, not directly, but he will somehow ask and inquire and inspect the CEO and ask him, are you sure you have 20? Can I check some kind of attendance sheet, your payroll papers? Can I check those? Then he will lead me to the HR. I'll get the information from HR. Then I'll quickly review. Then I'll ask this person or maybe his co-employees by name because 20 is countable. Or my team will have some kind of, there's also something known as mystery shopping. So you get into the company and you don't tell that you are exactly an auditor. So you act as a customer. So on one fine day, we will just walk into this company and see how many employees are working. If on some day they know I'm the auditor and I'm going to visit the company, they will make 20 people sit. But someday when I'm not given any prior intimation and I just quickly go there and check how many employees are there, I'll get my answer. Right? So this is something which an auditor would do. So he's going to collect sufficient and appropriate audit evidence. So what kind of audit evidence is needed from your working papers is this question asking you for 2 things. One is for lease, IFRS 16. So you should know what all evidence you might need. So you should know, first of all, the accounting treatment of leases. So you need to know what would be the audit evidence. Lease agreement? Yes. Then it could be related to your rentals, fixed rentals that you're paying. So there might be some journals, or in the bank statement, it would be written how much every month you are paying as rent to verify the accuracy. So you're going to comment on such things. So what type of evidence you would need for leases? So if you will not know IFRS 16, you won't be able to comment upon evidence. Then same for inventory, IS2. So first you'll talk about quantity of inventory. So you need those counting sheets where inventory is counted when everything is ticked. This is there in this warehouse. Who conducted that inventory count? Then the signature of people. Then two teams are sent. One team will check the inventory, count the inventory. Other will review the work of the first team. So all those papers are there, and that will act as my evidence, right? Then they are saying how will the report. Now, final work of the auditor is to give a report, audit report. That's the objective of the audit. The whole process of audit was conducted. So at the end, auditor gives a report, right? So this report is going to come out, and we are going to tell them whether this report is correct or not. One very famous requirement of AAA is critically appraise the audit report. That means tell us what is good in this report and what is bad in this report. So there's a proper format in which audit reports are prepared. You can't simply say everything is correct or everything is bad, or this is correct, this is bad. No. There are so many things, technical things involved in an audit report. So this is what they are asking you here. And that is the end of your paper. So question 1, business risk, audit procedures are omnipresent. Then you have in question number 2, section B starts. So you are going to be asked something about completion, review, or other assignments. Okay. So this question number 2 was related to capital expenditure forecast. So this was a review engagement. This was not audit engagement. So this is known as other assignment. So let me take you back to the syllabus. Since you have gone through the whole paper. So these two were the most important areas. Question number 1 for 40 marks plus 10 professional marks was from here. And this question number 3, 25 marker was from here. So how many marks? 75 marks, just 4 and 5. And these are must. You will always find them. But one question was related to other assignments. That review engagement, that was an other assignment, not related to audit. There are some assignments done, reviews done on forecast. There are assignments or reviews done for due diligence. It's not always that you give reasonable assurance. Sometimes you give limited assurance also. So there are a lot of things involved around audit. It's not just external audit, right? So as an auditor, you might do other assignments. So that assignment is there in syllabus area 6. Lastly, we also have our current issues. How many of you are afraid of current issues from SBR? Remember current issues from SBR or forgotten? Remember? So that is not related to audit, okay? So don't be afraid of it. There would be 1 or 2 technical articles which we will see in the ACCA website. If the examiner has mentioned that this is the current issue for this, this is a new technical article. Maybe like in SBR, we had related to climate. So similarly for auditor also, we have a technical article related to climate, natural disaster and stuff. So that is what is there in your syllabus. So what are the 2 most important areas of syllabus which are directly related to SBR? 4 and 5. 75 marks of my paper is made up of this. Then if it is so easy, ma'am, if it is so organized, you know what is coming in question 1, 2 and 3, then why in the world the pass percentage of this paper is just, what is the pass percentage? Have you reviewed the pass percentage of this paper? 32%. 30%. Why is it always ranging between 30 to 34%? Why? If it is so easy, if it is based upon SPR has 50% pass percentage, that was a headache to us. This is 30 to 34. How are we going to pass this paper? See, that's the reason why people are afraid of this paper, because of its pass percentage, not because of its syllabus. I am going to tell you the juice of this paper. Okay, it's not syllabus, it's not the direct theory questions. Everyone is good in theory. Okay, let me be very frank with you. If I give you a copy of notes, you can easily cram them and you can easily pass if the question was direct. But the way the questions are asked in AAA is something which makes it challenging, because they hit your base. They see how active you are while solving that case study. Is your mind open, or are you just limited? You're just thinking about MTR. See, you switch your job very quickly from business risk. While assessing the business risk, I was a CFO. And then in the next requirement, they're asking me about ROMM. Now I'm an auditor. And then they're asking me about audit procedure. Now I'm an accountant. So from SBL to AAA to SBR. Can you see switches in this exam? I'm sharing my own experience with you. When I sat for this paper, I remember I got a question on business risk and audit risk in one case study, 50 marker. And I was reading the case. I was able to identify, but my mind was totally messed up. At one time, I'm thinking about business risk, and the same statement is also an example of audit risk. So it was very difficult to bifurcate and articulate, because audit risk is MTR, business risk is simple. So it was very, and you have to keep in mind that you're using keywords. You can't write in layman language. You can't talk to the examiner. You have to use specific words, which you'll learn over the period of time. So that was the thing which makes audit very difficult to pass. So what is important is this exam is understanding, then evaluation skills, and then SBR knowledge, very much required. Okay. And this can all be done if you do revise your IFRSs. So I will revise your IFRSs as per the AAA format. Then your evaluation skill and understanding will develop while doing the syllabus and while doing the practice. Yes. So this is what we are going to focus a lot upon, especially the practice part. So I'm going to give you notes. And in these notes, now these are the notes that I used as a student myself. So that means I'm not prepared these notes. My tutor, I got from my study buddies. These notes are those notes that I used as a student as well. So I'm going to give those notes to you. Okay. So let study from my source only. So I have got those notes. I studied from there. I will give you those notes as well. Okay. And then we are covering the syllabus from there, not just those notes. I'm going to give you my class notes as well. So we are going to bypass the text, because in audit, we can't bang our head on the syllabus a lot. So we have to complete the syllabus ASAP so that I can move to the practice. So we'll cover it as per the class PPTs. Every live session, I'm going to bring a PPT. I'm not going to just write and teach you. I'll bring a PPT. That PPT will act as your class note. In addition to these class notes, if you want a reference, then I'll give you some notes. Those are extra. These are like a proper, which you can get printed. Class notes is summarized, because I'm going to teach those things in the class. So I'm not going to write or type everything. We will discuss the terms. So they will be more like PPTs. So you're going to use them and the notes provided plus the BPP kit. This is also what we will use in our course for past paper practice. So all our past papers are there in BPP, and I prefer BPP for AAA, Kaplan for SPR. Correct? So our schedule of live classes. See, I have not finalized the dates yet. The people who've already enrolled, I'm glad we've already got 20 learners for which we had the discount going on. 50% launch offer. So we've already filled the seats above that. So these students will have discussion on a paid group, and we're going to discuss what dates would suit you. So I'll give you my available time, because it will be a very, it's not a crowded batch. We're going to have discussion live, and it will be a very closed group, so that we can interact as well as we can work in accordance with your availability and my availability both. So today itself, we'll sit down and we'll make a schedule as per your and mine availability. I'll propose you some time, 3 days a week. I'll propose you time, dates. Okay, accordingly, we'll conduct a poll and we'll decide, okay, this is fixed now. And if you miss any live session, you're going to get a recording for the same. So within few hours, 2-3 hours, the recording of the live class will be uploaded on your portal. So you can refer to that recording as much as you can till the day of your exam. There's no limitation on hours. There's no limitation that, you can just conduct or you can just go through the pre-recorded sessions. You'll not get the access of live classes. No, we'll have a backup of live sessions till the day of your exam. Okay. So this is how our batch is going to run. If you want to enroll with the course, just simply visit tgprofs.com. I think it is open here already. Yeah. So see, 10% off is going on AAA. So you have to use this AAA 10 coupon code, and you can simply enroll into the course of Advanced Audit and Assurance. This is completely live batch. Yeah, okay. Ignore this, okay? This is 200 USD. So because I am in India, so it is showing me this. So 200 USD is the price, not 200 rupees. So it's because of VPN connected. So you're going to use this coupon code and get yourself enrolled for the course. And it will be completely live. If you miss any session, you'll get the recording for the same. As I said, we'll discuss the schedule as per our availability in the paid group. You guys are already part of it if you're enrolled. So if you have any doubts now, please let me know in the chat box. How to survive? This course will be just for March. Yes, this will be only for March attempt. If you want to extend, see, if you decide by the result of, by the date of result, let's suppose you got your result on 17th January. So you got an unfavorable result, assuming, not wishing or saying, I wish you pass. But if you got an unfavorable result and you want to shift your course to June, so you will freeze your course and free of cost, it will be shifted to June. But if you don't sit for the exam and you decided after 17th of January, then there will be a cost of 30% as extension fee. Yeah. Yes, we'll have a planner and everything being discussed in our first live session. So most probably day after tomorrow will be our first live session related to AAA. Webavi, I'll add you. Yes, Akash, you'll get the recording. Awesome. Day after tomorrow, Joy, not tomorrow. I know tomorrow is your SBR class. 8 p.m. Guys, mostly my classes are scheduled at 8 p.m. Indian time. If there would be 2 sessions a day, because SBR students are also taking AAA, so I might have to shift it to 6 p.m. So 6 to 8 or 8 to 10. This will be the time. Yeah. Okay. So that's it, guys. I hope this was a helpful session, and we do understand. If you would have any doubts, if you want to enroll, you can WhatsApp me. You know how to contact me. The number is +91 9877637809. And the students who are self-study students studying from somewhere else, if you want a support related to AAA, be part of our WhatsApp community. We keep on discussing ISAs also now, not just IFRS. So you can be part of my WhatsApp group. You can just text on this number. You'll get the link to the WhatsApp community and you can join it. So that's it, guys. Thank you for joining me. I hope it was a fruitful session for all of you and you do understand audit as well, in addition to IFRSs that you guys were already studying with me. So keep smiling. Have a nice evening ahead. Thanks for joining in. God bless you all and see you in the class, the people who are already enrolled or planning to enroll. Bye-bye.